Good morning. Currently the 5th of June. Pre-market.
Yo, Bash, you been tripping on them hoes?
Let me make sure you can see everything. If I change time frames, yeah, we're good. See a little more. Why is it so zoomed in? There we go. Let me get this. Perfect. There we go. Alright, cool. See, on some weird shit. What's it doing? So pre-market starts in that. Let me remove this shit. The drawing tool tab. Remove that. And, oh shit, it already started. So New York Open will be right here. So, oh boy. I want to talk about what keeps my win rate high. So let's go through it. So the first thing that keeps my win rate high is lower time frame structure, right? So in my videos, you guys will see me go from the lower time frame, the 1 second, to the 5 second, to the 15 second, to the 1 minute, to the 5 minute. Like I'd zoom out on the 1 minute as well. To the 5 minute, to the 15 minute, and I'd stop at the 15 minute. So let me just go through that process. So what I mean by lower time frame structure, I'm talking about paying attention to structural highs and lows as you're going up time frames. And I'd stop here. So the whole point of this, I get a feeling that Okay, cool. Now everything's fine. But the whole point of this is to know where you currently are in the market. All right. So the next step of what keeps my win rate high is understanding the narrative. So higher time frame narrative. So now you're on the higher time frame right now. I'm on the 15-minute, and I zoom in to the point where I can see the open, high, low, and close of each candle clearly. And when I zoom in, the third thing that I'm paying attention to is the last previous range. This is the last previous range. Why am I paying attention to the last previous range? Because the last previous range is all that you need to make a decision on. So all this shit here to the left, you're not using. I don't care what's like up here, I don't care. All you need to know is where price came from, which is this structural low. What price has done, which is break structure. What price is doing, which is the last candle. So if I'm preparing for lower prices on the 15-minute, I'm looking for that. So the fourth thing is tracking the last candle. But why am I tracking the last candle? I track the last candle after a break of structure, right? In this case, we closed above a structural high, creating a previous range, creating a previous high. And then from there, I know that on the lower time frame, we're in a cycle of higher highs and higher lows. So on the 15-minute now, I'm now tracking the last up candle. But why? So I'm tracking the last up candle to get the earliest indication that chasers have now engaged in the market. So whoever is entering in the position here, because on a lower time frame, they saw that this was a break of structure. Surely if I go in 5-minute, you'll see a break. So for people that think that price will continue to go lower, they get liquidated, and that's what I look for. So that's why I remove all of this. That's the whole reason of why I track the last candle, so that I can see when chasers are engaged. So now that I can move on to the next part of my plan, which is to see them get liquidated. In the foundation playlist, I talk about that first reversal can just be a liquidation to go higher. Or lower, depending on what type of cycle you're in. So we see the liquidation. See a failure, but that's moving a bit too forward, you feel me? So let's just go down on the 5-minute. Boom, boom, boom. So on the 5 minute, we pay attention to the last previous range. This is what I see. Woo! This is the last up candle. You see a move below it. What do you see after? Whoever participated in this move, whoops. How do I? Got stopped out, but that's what you're looking for. That is why I tracked the last candle. So far I've talked about lower time frame structure, higher time frame narrative, the last previous range, the last candle, and chasers. Waiting for chasers to engage and get liquidated. In the 1 minute, what's going on? This is the last previous range that was just created like a minute ago. What am I tracking? The last candle. What am I looking for? I move below, back up like this. My entry is right there. And I stop at the 1 minute. So you guys saw me go from the 15 minute to the 5 minute to the 1 minute. That's really the whole higher time frame narrative. Now you know what the fuck is actually going on. Now, if this is my plan. If this price action doesn't form, then that's fine. I continue to track the last candle. But that is what keeps my win rate high. Really and truly. That allows me to stay on the right side of the market. Now, yes, how I enter is also a factor into how I keep my win rate high, but that's the last thing though. In order to get there, I must see the market correctly, from a correct perspective, and it's literally just the whole process I just shown you right here. Where my Vaseline at? My lips getting. Where my Vaseline at? So I'm just gonna leave this aside. I'm gonna wait for this candle to close, but as it is currently, this can be the last up candle. Let me I'd have to look. I'd have to see something on the 5 minute, a wick above this high on the 5 minute to engage in a move down. So I need to see a failure. Get rid of this. Just track it. But it's different if I see a close, because then we would have created another previous range. Then I'm gonna have to reevaluate the whole idea. We got 5. We got 3 minutes left on this candle. Now, what is the likelihood that price will do some shit like this and still not close above here? It's pretty low. So is it likely that I will engage in a move back down? Nah. But if it happens, it happens, you fool. Now, if we get below this close here in that previous candle, then that's wild, I'll be real. Let me even just highlight that. This purple line is coming from out. Where is this coming from? The 5 minute. And we've seen multiple. Then we saw this, and we saw. Okay, so that's a structural high on the 1 minute. Say no more. We got a minute and 40 seconds left on this one candle here. If we close below this high here, then there's a good chance that we can get involved in a move below. That's if, though. I think we just got, okay, cool, there we go. Now I'm looking for that. It's a 5 minutes in. 5 minutes. We've got a minute left until the close. So let's see how this closes, isn't it? Let me stretch this across just so I can see clearer. So far, this is the narrative on the 5. So my idea right now is that the second reversal is the real reversal, right? That's why you see 2 purple lines there. But it seems like we'll see a closure up above. If you do, that's fine. Why? Because in this trend up, this is only the second pullback. So we can see some shit like that, right? Make that different color. Like, make it like that. We can see some shit like this. And then you wouldn't participate in this. Why? Because it's the third pullback. Now, yes, this pullback's here, here, and here, but they're not from the same time frame as this one and this one and this one. So we ended up getting a closure. So now it's the same sequence again. Let me get rid of, in fact, hold on. Boom, 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 boom. Boom, boom. Yeah, it would have been different if we put close below here. So it's this high that I'm looking at. Now essentially on the 5 minute, I'm just tracking the last candle. And fuck is this? Boom, 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 boom. Now look, in situations like this, you see how we closed above a high time frame high, right? I'm talking about this right here. So what you want to do in this situation, but we don't need that no more. It's best shit on my chart that's making it confusing. We don't need that. That's context. We don't need that. Alright, cool. So when you see a closure up above a higher time frame high, you can see that this is coming from the, what does that say? From the hourly. So clearly this is not coming, this is coming from the 1 minute, more specifically. As you can see, the time frame in which this previous range comes from is from the 17 minute, 53 minute. So this is a previous range from the higher time frame. So what you want to do is not track the last candle from the 1 minute. It was okay when price was here, but because we broke above a higher time frame high, you want to go onto a higher time frame and track the last candle from there. And all you're looking for, all you're looking for is a move below. For what? For why? Because you want to know when chasers are engaged. As soon as you get that indication, and that indication is a move below the last up candle, then you can go back onto the 1 minute. Because now you're just looking for that liquidation. However, on the 1 minute can provide you a move before that liquidation. Since this is the higher time frame after all, this is the 5 minute. We've got a minute left. Hold on. So what the fuck is that? So far, we don't need that. This is looking at the up candle. Black. let me let it close first before I make that decision. Mm, 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 mm. Don't mind me, I'm just bored. I should just redraw this, like, bro. I recommend that you guys just do this too if you have access to the 1 second. Like right now, I'm literally just waiting for Price to, like, where is it? Like I'm just waiting for chasers to engage before I move on with the next part of my plan, right? So on the 1 second, I'm just, just following Price. These are not like decisions I'm gonna make to trade, but you know how these concepts are applied fractally. So it's just I guess when you're just there sitting waiting for something, just go in the 1 second and just chart, mark stuff out, and just see the shit fractally, The whole reason I even got this going on is because you see 1, 2, 3. So I know when Price breaks out, that third pullback right here usually doesn't hold. And that's that first reversal. But then when you see that first reversal, that first reversal is just a move to liquidate positions and go higher. Your move would be somewhere here. So now I'm looking for it to just move back into the range. So we see them move back into the range. Now this is a stretch now, but now I want to see that Price, take this lower. Now, of course it doesn't, because the current cycle is higher highs and higher lows. This is just me purely speculating, So you don't have to do this shit. but doing this will teach you how to anticipate. The 1 second is the best time frame for you to understand how price moves. Because structure is just created and broken, created and broken, created and broken all the time, and you'll start to see a pattern of behavior. Rather than waiting 1 minute to see a close, or 5 minutes or 15 minutes to see a close, you're able to see a close in 1 second. So your ideas are validated and invalidated much quicker than if you were to just wait on the 1 minute or on a higher time frame before. And that will really like build conviction for yourself that this shit is really fractal. Now, you know, trading it is a different matter. I'll be real. It is tradable, however, it's a lot of drawdown. The way I trade anyway. You guys can test that out if you guys, want to, if you're curious, but I experienced a lot of drawdown before I actually take profit, and I'm just like, yeah, I ain't with it. Ended up flinging up, so this idea is no longer valid. So really it's just about that one there. And I moved back in. So it's actually ridiculous how many times you see this shit, but you see it all the time. Just break above a previous range and then move back into the previous range. Honestly ridiculous. The same shit happening there. So it's also good because the 1 second actually you're able to see this is the last down candle. This is the last down candle. Is the last pullback. You guys see where these areas are reacting from? We've got the last down candle here. This is a techie one, but this is the last pullback, but jeez, I guess this whole area here. But with the rules that I tell you, you know that you wouldn't be buying high. You feel me? And what is considered high? So in the previous range, you see high. So high, buying high starts from the low it starts from the low of the last up candle, responsible for the previous high that made the previous range. So that's where high starts, buying high you want to consider buy, like, you see how I just liquidated that? Even though this is a high probability area. Where did price go to? What is it doing now? So the 1 second is really good for you to build conviction that, yeah, like these areas, I think it's just my drawing, but yeah, look, it literally went there, like to the tick type shit. So it's like likewise in a downtrend. If I can find an example, even though we've been trending up for time, like, so selling low is something that you don't want to do as well. So where's the down candle? Selling low starts at the high of the last down candle responsible for the previous low that made. In fact, wait, what? No, I don't even think it's that. Because that would have been before, right? Right. So it starts from the down candle, the high of the down candle responsible for structural low. So what the fuck did I say here? I think I said here oh, okay, cool. In this case, this is buying high, right? This is responsible for the previous high, correct? But in a down, in this case, where were we? This was responsible for the structural low. If you looked at, this is the last down candle here. We saw a closure above it, meaning what? That's a pullback, right? In a cycle of, so creating a structural low. So selling, starting from here, that's not something you want to do, G. Because most of the time, you're more susceptible to pullbacks, just like that. So that's just something. Let me just delete all of that because it started going off tangent. But yeah, the 1 second is really good to study. It's a really good study. I haven't even been keeping track on this, but let's put this there.
Yo, Bash, you been tripping on them hoes.
1 minute until this candle closes. Though, you know, I was super specific with it, I don't really talk about it too much, like tops and bottom of the ranges, because usually I'm waiting for a structural high or structural low to be taken anyway, right? Before I decide to engage. That's why I haven't really been talking about it too much. But you may trade a different way from me. So I'll say it again. The top of the range is the last up candle. The bottom of the range is the last down candle. So you don't want to buy at the top of the range. You don't want to sell at the bottom of the range. You don't want to buy at the top of the range. Where's the bottom? The bottom is here. Yeah, you don't want to sell at the bottom of the range. So see over here we have the top of the range. You don't want to buy here. You see how price came below it. Though this area was sort of within it, but it came below it. I went further, right? You don't want to sell at the bottom of the range. So same here. Last up move there. So how I'm getting these last up and down candles is from previous ranges. So when a previous range is created, you want to pay attention to, so you see how we're in a cycle of higher highs and higher lows. You want to pay attention to the last up candle responsible for that previous high and the last down candle responsible for the structural low. Those are the tops and bottoms of the range. You don't want to buy at the top. You don't want to sell at the bottom. And if you're going to build a plan, that's a must. Now, I already apply it because I wait for a structural high to be taken first in order to sell. I wait for a structural low to be taken in order to buy. So I'm really getting in at the extremes. But if you're someone that may not trade the same way as me, then this is a rule that you must apply. Don't buy at the top. Don't sell at the bottom. And it's that classic shit. Like but it's like some, call it like, it's pretty much a proverb at this point. Buy low, sell high. Buy low, sell high. Don't buy high, don't sell low. You feel me? But this is what it looks like technically on the charts. I know my charts look like a mess too, so. But that's how it's gonna be when you're on the 1 second, just, you know, learning. It's okay to have your chart as messy as this when you're learning, but when you're trading, it's not really good for your mental. It can be like information overload. So I'm still waiting for a move below. So even though price is making its way up, I'm not looking to get in a buy position. Why? Because we just broke above a structural high. I'm looking for shorts. I'm looking to sell. That's me applying the rule, don't buy high. Buying high starts from what? This is the previous range, right? Buying high starts from the last up candle responsible for the previous high. So I know as soon as price gets here, I'm no longer buying, I'm no longer looking for buy positions. You guys see it here too. Imagine you was planning to sell low right here. This is the last down candle responsible for the structural low. And this is what happens when you choose to buy high. You're dragged in drawdown. But when you choose to buy low, this is the result. I hope you guys understand what I'm saying. So we don't need that. We don't need that. What's price doing now? Okay, cool. So this shit don't matter. I was just demonstrating tops and bottoms of the ranges. Remove that. Remove that. Yeah, so now it's also a good practice as well to follow mitigations. What do I mean by that? I mean, see the last pullback and the last down candle? These are areas in which price chooses to mitigate before continuing. Price just can't keep going, up and up and up and up. It needs money. It needs people on the other side of the contract. So if you want to buy, if you want prices to go higher, if you want to buy, you need sellers. So of course, as price goes down, one of the main emotions that people feel is fear. A lot of people will start to look to sell their positions. So some people though, and clearly it's only some people. Why? Because the overall sentiment of the market is what? Going up. But the some people, that small group of people, is just enough to actually keep price going. And for some reason, it always seems to be at the last pullback and the last down candle. For some reason. I don't know why, but it's there. You guys see it too, right? So following mitigations, it's not needed at all, but it's not an extra you can have in your toolbox to understand the trend, to understand where price is going up. But also following mitigations allows you to understand that, if price breaks structure, oh wait, is that even structure? Oh, that's my bad, hold on. Where the fuck is structure? Okay, on a lower time frame. Yeah, so on a lower time frame, that is structure. So if price breaks structure, then best believe, since we've already mitigated all these areas, they're not gonna hold. So you can expect for price to reach into this low. So looks like I won't get in a trade pre-market. That's fine. I'll come back for New York. I hope you guys enjoyed this recording. I guess this was more about me reading a narrative. But definitely backtest everything that I'm showing you. Make sure you see what I'm seeing. and apply it the same way I'm applying it. I'll see you guys later.